Hello. Hello. It's weird. I clicked stream and the chat went away. Every month there's something different. Anyways, hello. Anybody? I gotta zoom in. Yeah. All right. I guess. Guess I'm here. Good morning, everybody. Wasabi. Happy Non-Farm Payrolls. This is Trade Non-Farm Payrolls Live for the 164th month in a row. Yes, that is 13 3/4 years. Wowzer. But let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good morning. G'day, mate. Hi, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being this webinar here at FX Street. Almost 14 years for this webinar. How amazing is that? All right, so it looks like I'm not going to get chat over there, but I do have chat over here. So let me readjust some things. Okay, I got to move this around. I got to move. Give me the juice. All right, so I got that. Hang on, moving things around. So cool, nice to see you. Hey, if you're looking for a new broker, why don't you visit TradersWay.com? It takes less than 30 seconds to open a demo account. Once you're in there, you can download MT4. You can test the execution speed. You can check out the spreads. You can check out the amazing swaps. And if you're a client, I do a free webinar every single day for about an hour and a half every day, focused on teaching you technical and fundamental analysis. Not bad. Complete package. TradersWay.com. What's up, guys? Oh, gotta move this around. Hang on. Oh, looks like you're in the camera. All right, hang on. Gotta move this around. Gotta move that around. Hang on. Papa's working. So why don't we start with this? Yeah, Barry, I just finished my my breakfast. All right, cool. So why don't we start by you telling me where you're from? I was born and raised in Canada. Lived in California, did that whole .com thing, and then moved to the East Coast just before the real estate crash, and I mean minutes. Pete, off the top of my head, not entirely sure. Okay, so this is not bringing up the chat. So check this out. I think I can fix this too. This is going to be cool. So where are you from? Scotland! No way, Craig! Craig! I want to go to Scotland and see my castle. Where my castle at? All right, so hang on. Where is the chat box? Is that the chat box? That's the chat box. All right, I can update this. I got this. No, I don't. Where do you put the... It's not there. It's not pulling up chat. Source, maybe under source. No. Goal, dang it. So I don't know how FX Street has this webinar set up, but for some reason it doesn't do things like pull in chat from the channel, and it does everywhere else. So it's not even doing there. Sri Lanka, Colorado, England, Malaysia, Argentina, Namibia. Wow, London. Very cool. That's really cool. Barcelona, FX Street in the house. Yeah, I've been to Catalonia. Never been to Spain, though. Someday. Dubai. Cool. Very cool, guys. Now let's, oh, look at this. So I can move this. I can make things bigger, it looks like. Now tell me what currency pairs you are interested in having me cover today. What's on your mind? Talk to me, Goose. Will I adjust this? St. Kitts. Right on. I've been to the Eastern Caribbean Central Bank in St. Kitts. The ECCB. Hi, I am with you since last 3 months, and you did the pound yen trade and you got more than 2,000 pips. Well, congratulations. Okay, gold, USD yen, Dow, USD CAD, pound dollar, CAD yen, all. Thanks, Pete. That's cool. I'm cool with that. Gold. Of course, I'm going to cover everything. I just want to know what's on your mind, most importantly. Oh, really? Yeah, right on. Yeah, I did an FX Street interview about this time of year. I think it was December 12th, 2000 and what was it, 16? And I was in Nevis. At that when I did the interview, and I was in a suit and tie and stuff, 3-piece suit. Who didn't look like a local for sure. And then I was on my way to the ECCB over in St. Kitts. So, you know, you're not a playa until you wear a 3-piece suit and then get on a jet boat in the Caribbean. It was like a rap video. I could have been like, boom, and my coattails are blowing in the wind. I'm like, I look like P. Diddy on that speedboat. Go on my way to St. Kitts, right? Sunglasses on. Yeah. Good times. Fun times. Okay, so right on. All right, that gives me a good sense of what's going on. Now, are you updated with the OPEC deal? They finally just got together. They met for 6 hours. Nothing happened. So they all went out for a cigarette and they're like, yeah, let's do this. So they came back. They announced 500,000 cuts, but that's not enough. That's wimpy. Come on, OPEC. So really, it's not a game changer. So typically when you cut oil supply, prices will go up. I don't think that's enough to do it. So I'm not sure. If anything, oil prices might come down just because the world was priced in more than that. 500K is just not a lot. So anyways, that's kind of interesting. So that news just came out here. And so I'm looking at this. And again, typically when OPEC cuts supply or if there's any supply shock at all, whatever it is, prices are supposed to go up. So the fact that prices have dropped in the last few hours, it's just because, look, we got the OPEC news. It's just not that great. Right? So anyways. Chuck Duck believes what? With the ADP? So here's what I think what's going to happen today. There's going to be a mixed message. There was a strike with General Motors that kind of messes things up because when the strike goes on, it gets counted as job cuts. And then when they get rehired, when the strike is over, it's gains. And the timing of everything, I'm not entirely sure about. Right? So that messes things up. Do you know the average? No, they did. They did cut. It's done deal. That happened like 15 minutes ago. But 500K, 500,000 barrels a day is just, it's nothing. Right? When you think about the Russians and the Americans, they're going to just, I mean, they could snap their fingers and produce that. So, you know, it's not going to change anything. But, so what were we talking about? WTI. So NFP number. So we got that job cut stuff. Okay. And then we should probably pay attention to the average too, right? What's the mean, and then what's the standard deviation to the mean, and that would tell you, the likely high end of the number and the likely low end. Now, I haven't calculated the standard deviation to the mean, but I do know the mean. Okay, and then you can create the standard deviation from the plot chart, right? Dot chart. You have to calculate the slope first, right? Was it y over mx? Y equals mx plus b. So anyways, what's the average? Do you guys know? Right, Jen, that's what I'm saying. So like a small cut, doesn't matter. Everyone's going to cheat. And I've explained the game theory behind cartels. Everyone's incentivized to cheat, which means everyone's going to cheat. That's why you need like Pablo Escobar in charge of a cartel. Because if you cheat, which you are going to cheat, then you pay the penalty, which keeps people from cheating. That's right, Imad. $1.50. I think it's 156, but it depends if you do from the 6 month or 12 month, right? But yeah, 150. That's exactly right. So I think the number they're expecting is 170, 175, wherever you read. The average is 180 or 150. I'll tell you what I would like. I'm now in risk off mode. You may know that in August, I bought all the yen pairs. In September, I bought all the yen pairs. In October, I bought all the yen pairs. And on Monday, I exited. Cool. Now, how many people actually saw that interview I did in St. Kitts and Nevis, excuse me, St. Kitts and Nevis 2 or 3 years ago for FX Street? How many actually saw that one where there's a volcano behind me? You can barely see my face because it's so bright. And the funny thing is, I rearranged the whole, so I was at the Four Seasons. It's like, I had the cheapest room in the hotel. It was like $1,300 a night or something. And I had moved the furniture around, and I'm not joking. I had the lampshades off with all the lights on, and I moved things around so light was hitting me. And you still can't see my face. It's really funny. But if you look at it, if you watch that video from a couple of years ago, I explain the pattern that I'm doing. Okay, the seasonality of what I do. And the interesting thing is that I know I'm going to do it before I do it. So like I run a swing trading group, and I spend summers in Cambridge at school, and I come back and I run this group, and the whole idea is swing trading. So you're in trades a minimum of 300 pips, right? And I started it the third week of August, and I get everyone together. I'm like, okay, the reason we started today is we're going to long all the yen pairs, right? And we're going to wait. We're going to try to ride this all the way to Thanksgiving, and somewhere between Thanksgiving and December 12th, because December 11th is the Fed meeting, somewhere in there I'm going to exit, right? Now, the funny thing about that's what happened this year. If you look at what in that interview 2 years ago, I'm talking about the exact same thing. Oh, thank you. I'm talking about the same pattern. So what I did 3 years ago is what I did this year, generally speaking, right? Oh, my screen's too big. Sometimes it goes full screen on us. Where am I? Over here now. Oh, so this is, they got it. This is the seasonality part. So this is the 3-minute clip. This was like a 1.5 hour interview.
Okay, and then in terms of levels, so I mean, we're 118 at the moment.
Wow, windy that day, huh?
Strong area, plenty of offers above 118.50 by the looks of things. You're going to be buying into yen, but how far back do you think this has come? Because I mean, we've had a huge upshoot, right? So usually, you know, markets like to replenish those spaces on the charts. Where do you think this could come back down to? And remember, we are in an era of strong dollar, fundamentally, right? Because there's a
Anyways, you'll have to watch it.
on the offshore market of dollars, right? So we're in an environment where interest rates are going up and yields are going through the roof. You know, they finally are chickening up. Here, if you hit your goal so that you get your full bonus, you don't want to screw.
Anyways, you'll have to watch it. And I don't know if it's in that video or in the 1 hour version, but I break down, right? I break down the yen trade week by week. So I say, in this week, I know the market's not going to be bullish. The trend won't be bullish yet, but I'll start buying. And then it will go bullish, and it'll do it until this period, so like 9 weeks. And then that period I said, look, I'm long all the yen pairs, and I'm about to dump everything. And I think it was actually that day or the next day I dumped everything. But then I break it down like, okay, so all the yen pairs are going to go up, but now at that point, I'm going to start preparing to sell all the yen pairs, not buy all the yen pairs, sell all the yen pairs. And I explain week by week by week what I expect to happen, things like falling and then false rallies and then falling again and all this kind of stuff. And it's all in the video. And it's just, so I lay out my annual plan based on seasonality. So you might want to check that out, at least the hour version. Yeah, St. Kitts. Well, and so I was looking at hotels in Nevis, and I met with the government in Nevis, which is really cool. Walking in to meet like the government, right? There's like 12 cousins. You walk in and you know, it's a beautiful tropical day, and there's like a Christmas tree all set up in the lobby. It's really great. And it's all white, like there's snow on it, and it's beautifully decorated. And there's monkeys outside eating them like, there's no snow in Nevis. But anyways, it's great. It's a great time to be there. But I'm still mad at the Four Seasons. I don't think I'll ever stay there. I'm sitting by the pool. It's like 80 degrees because it's 80 degrees every day. And the guy comes up and he's got a tray full of bottled water, Four Seasons bottled water. He's like, sir, would you like a bottle of water? And I'm like, yeah, that sounds really nice. Thank you. They charged me $13. Dude, he came up to me. Would you like a bottle of water? Like just a cheap bottle of water. Would you like this bottle of water? I'm like, yeah, that's a good idea. I'm probably getting dehydrated. Yeah. Didn't mention it was $13. I'm like, oh, you're nickel and diming me. I'm paying $1,300 a day and you're screwing me on water. I checked out right then and there. No joke. Checked out of the hotel. How dare you? How rude. But anyways. Yeah. So anyways, go St. Kitts. All right. So anyway, so check that out because that's a video of by the way, I ended up being very, very, very right. Almost week by week. I'm like, third week of January, there's going to be a false rally. It did and all that. The point isn't me being right. The point is I want you to listen to what I'm talking about as far as seasonality of markets, how markets tend to behave. And that also take into account that I'm planning my trades weeks and even months in advance. So now I'm in this strange period of time where I expect the upward move in all the yen pairs to be done. Doesn't mean it is done. Just means that was my plan. So now I'm going into these things and I'm like, hey, I should probably thin the herd here, right? Call the herd, get some of these trades off. And now in the next 2 to let's say 2 to 4 weeks, I expect yen strength. Doesn't mean I'll get it. Doesn't mean we have it. But I can start looking for it. I can start planning for it. It doesn't mean I just sell. I did actually, but there's going to be volatility up and down until the whole market either agrees, yen pairs will fall, right? Or if the whole market agrees that it won't fall. We're in this period of not really sure. Now, typically, I don't get aggressive, like I said, until December 12th. And then I look to get aggressive. In that video, I clicked the wrong button. Okay, you're still here. In that video, I said I'm getting ready any day now. I said it could be today, it could be tomorrow, it could be the next day, but it's going to happen. So that was the 16th, December 16th. So in that video, I'm like, I'm still long all yen pairs. I have been long for months and months and months. I'm getting ready to dump the whole thing and then reverse. Not just take profit on everything, go from a hardcore bull to a hardcore bear, and I did. Like either that day or very, very shortly. If that was a Friday, then it was the Monday. But all of a sudden, if you go back and look at what happened to the yen pairs just after the 16th, or maybe even the 16th, you'll see it just went. But I told you in advance here, in a 3-piece suit on a tropical island. Whoop, whoop. If you're going to do it right, son. All right? So anyways. Check it out, man. Check it out. And again, I don't know if it's that one. I don't think that was actually the right one. You want to look at the hour version, not the 3-minute version. Cool. Cool. So something for you to do. All right. So anyways, what I was saying is what I would like today based on that filter. By filter, I mean bias. What would benefit me would be dollar strength. Global risk off mood. What needs to happen today for me to benefit? A disappointing NFP. They're expecting what? 175. The average is 150. What if it comes out like 82? What would happen? Would the stock market go up or down? Oh, thank you. And I noticed I clicked the link and I realized and it did say 1 hour, and then I realized I clicked the different link, which means you had put the new link. So I appreciate that. Thank you, moderator. Best moderator ever, right? World's greatest moderator. Oh man, I got to get you that t-shirt. Okay. So that would really benefit me. Now, am I predicting that? No. But if we had a bad non-farm payrolls, the stock market would come down. That would be a bad thing. Now, what would the Fed's reaction to that be in a couple of weeks? On the 11th of December. So what is today? The 6th? So we're coming up hot and fast. Okay? We have a disappointing, and I don't care about the number. It just needs to be disappointing. A disappointing non-farm payrolls today. What would that lead Jerome Powell and the Board of Governors and the Federal Open Market Committee do on the 11th of December? What would they do in light of a poor performance? Put your votes in. What's the response? What would the Fed do? Yes, Milad, I'll get there. This is a 3-hour webinar, Milad. I got you. So this is great. Some people say raise interest rates. Some say lower interest rates. Some say stop and do nothing. This is great. This is why we have a market. Not everybody agrees. And not everybody even understands, so they make poor decisions. It doesn't matter. But this is why we have a market, right? If we come into a bad non-farm payrolls number today, and by bad, I just simply mean disappointing to the market, whatever that is, then that would probably give the Fed the green light to cut interest rates further. That's most likely the interpretation. And the better, the more they cut. So if it comes out 120, all of a sudden people are like, oh my gosh, the Fed's probably going to cut. If it comes out 80, they're going to the Fed has to cut. Okay? Now, with that being said, what happens to the US dollar? Does the US dollar get strong when the Fed cuts rates, or does the dollar get weak when the Fed cuts rates? Talk to me, Goose. It doesn't have to be this month, Juan. It doesn't have to be this month. We're forward looking anyways. The Fed cuts interest rates. How about this? Today, the number comes out bad. We instantly assume the Fed's going to cut interest rates again in the next 3 months. What happens? What do we do? How do we put this into a trade? How do we make money, honey? The US dollar would get strong today. Thank you. The Swiss franc would get strong today. The Japanese yen would get strong today. Okay? Hey Wayne, can you allow hat, please? We can't see it on your stream. I have no idea what you're talking about, Benji. That's right, Maxine. You guys, so many of you got it correct. Awesome. I've spent a lot of time recently doing training on behavioral finance, and it seems like it's clicking through. So once again, guys, if you're not so sure why that happened, if you're scratching your head, you're like, what? The Fed cuts interest rates. Isn't it supposed to get weak? If you don't understand what just happened, go to tradersway.com, open an account, just a demo, that's fine, takes you less than 30 seconds, and then you can join my daily webinars, and I will teach you behavioral finance. And the cost for that is free. Okay? Cool. Right on. All right, so we got to talk about NFP. Well, before we do that, why don't we rip apart the buck and prepare. So the first thing we need to do here, let's back up. So what you see here is some moving averages and some pivot points. If you don't like the moving averages, I'll kill them for you. I don't care. Because what I've been hearing from some of you guys lately is like, oh my God, there's so many lines. I can't figure this out. It's too complicated. All right. So anyways, I could even, let's just start fresh. I guess I could have done this a different way, but all right. Okay. So let's start over. Right now, all I have on this chart are monthly and weekly pivot points. Okay. That's what all these boxes are. The big ones are monthly. The little colorful ones, they're weekly. They just give me entries and targets. And I have no moving averages, no oscillators, no nothing, but these candlesticks. And look, maybe they don't even need to be candlesticks. I'll make it a line. All right, so if I'm going to make it a line, let's make it fatter if I can, if I may. Where do I do that? I might have to do it from the properties, huh? But I can't change how fat it is. All right, we'll leave it there. All right, so now I just simply have price. And price is a leading indicator. Okay? They're a leading indicator. So they tell me where support and resistance have been defined by the market in the past. And you extrapolate that to say, well, if the psychological level of 110 was important 3 months ago and 6 months ago and 9 months ago, it might be important in the near future. You see what I mean? So that's the general assumption with price action. So that's what this wiggly line is. It's just the price over time. Okay? Price on the right, time on the bottom. The next one, the boxes, are also a leading indicator. And they're also trying to tell me support and resistance, but they're not looking at price. They're looking at the market. What's that? My coffee mug? Well, a boy needs his coffee. So I'm trying to get my drawing tool to show up. Oh, opened way down there. All right. So these pivot points are looking at, like, this period here is the December pivot points, okay? And what it's saying is it looks at last month's low, I think it was about here, last month's high, which is about here, and it doesn't look at the average, it looks at the weighted average of the high and low. That gives you sentiment. It adds sentiment into the price. Now, it looks like average right now, and it basically is, because we have the high, the low, and the close is in the middle, so you're going to get middle. But what it's really doing is the high, the low, right? That gives you the range plus the close divided by 3. Well, the close, adding the close says, all right, where did the market end? What, at the end of the period, at the end of November, where did price close? Did it close up near the high? Did it close down near the low? If so, it's going to adjust this pivot point up or down depending on how the market ended. What did the market feel like at the end of the period? And of course, you can carry this out end of the day, end of the week, end of the month, end of the year, any way you want, but it adds some sentiment to your analysis. So, like, using price action, that's just looking at, support and resistance, right? I mean, it's just cold-hearted facts. And pivot points are adding a little bit of humanity to it, adding the sentiment-weighted analysis in there. And so we're looking at the projected low, if you're a bear, is there. Projected high for December, if you're a bull, is there. It doesn't tell you to be a bull or a bear. That's your job. But once you know if you're a bull or a bear, now you have an idea of a price where you should enter and a price where you should take profit. And so, like, a bull, for example, could do this with their eyes closed. That would be the trade plan for the month of December. That is so ridiculously straightforward. Okay? And if you're a bear, you're selling here and your target is there. And that also is ridiculously easy. You just don't know which one's going to work. That's why your decision-making process, your analysis, is important. So a bull would look at it this way all day long. Okay? And a bear would look at it a little bit differently. Let's change the color here. They'd probably look at this and say, oh yeah, okay, all day long. And who's going to be right? We don't know. Okay? That's why you need to make decisions. And to make decisions, you need to be informed, which means you need to do your own research, technically and fundamentally. The interesting thing, when I talk about trades months in advance, I'm not talking technicals. Generally, I'm talking about things like fundamental analysis of macroeconomics. Okay, I have a degree in macroeconomics, so I find it important. But there's also like business seasonality. Okay, we have business cycles, we have real estate cycles, we have political cycles. And that's very similar, like, you know, or at least a farmer has a pretty good idea when they want to start planting their seeds, or at least plowing their fields. Do you do that in February? Not in Saskatchewan. In April, maybe. And when do you plant? Well, you know when you would like to plant. You don't know what day. You have a general idea, but maybe when you get to your favorite planting week, maybe it rains. Shoot, in Saskatchewan, it could snow in May. And you're like, well, that throws out my plan. I'm going to have to wait a couple of weeks. Well, trading is very similar. Like, you should know generally how the world works, how economics work, what kind of patterns occur quarter over quarter over quarter. But it doesn't tell you exactly when. It just tells you generally. So if you know generally you should be planting or plowing your fields, let's say the third week of April, you're preparing for that and you're fixing your equipment and all that kind of stuff. You know what to be doing at the end of March, beginning of April. You're getting ready to do this. And then you got everything ready. All your tools are ready to go. And it rains that week. You're like, okay, well, these are not the conditions that I want to plow my field in. The problem with many new traders is they show up and they're like, yeah, it's raining, it's ankle deep in mud, but I got to plow, boy. I got to plow, right? Let's get out there. Where's the John Deere? Let's go. And they just go out there and they just make a bloody mess of everything. The field is just a disaster, and you ruin your very expensive equipment. And then finally, when it's time to plow and the sun comes out and the fields dry up and the birds are chirping and you're like, this is when I should be plowing, your tractor's broken. Like, why is your tractor broken? I went out in a mud storm and I just decided to try anyways. Right? Okay? You need to use your technical analysis to measure market conditions. And then you say, if I'm a bull, are these market conditions favorable to me? If so, I'm going to trade, profit, 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 profit. Or you look at it and you're like, I'm a bull, but ooh, these market conditions are mediocre at best. I think I'll take a hall pass on this one. Yeah. A farmer's smart enough to know you don't take your John Deere out into a muddy field full of, miniature lakes. You should look at the market the same way and figure out when to sow your seeds. Make hay when you can, right? Oh, Chubby wants me to give him clear sense. Oh, well, I'm not going to, so have fun. All right, so what time is it? So we got about 15 minutes. So what I wanted to do today is find the nearest support and resistance, and then the farther support and resistance, okay? So if you are a bear, you know you want to look at places to sell. This is definitely one of them. The challenge is we're on it right now. So this would have to just drop like a ton of bricks for you immediately, right off the news, right off the headline, and then up, 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 and catch a pullback, right? Which I will guide you through. Now the next one, let me get rid of the tool here. Okay, the next one is up in here, don't you think? So this gives us a bit of a problem because we have to decide, and I'm thinking the higher side of this. Cool. Now let's go to the bottom. If you're a bull, you know you buy at support, okay? The farthest one is here. The farther is what? I guess we're going to have to look at this. And now we got all this noise on the inside. So let's drop on a smaller time frame, okay? So a bear would hope to see like NFP just drops this instantly, dollar strong, boom, bad non-farm payrolls. And your plan would be something like this. And this would be all of today and Monday and Tuesday as well. So it would last that long, most likely. Okay. But for now, let's say for today, you'd get that. Now, if the number comes out hot, comes out $1.75 or higher, then the market's going to say, oh, there's no way the Fed's going to cut anymore. Okay, if the Fed is done cutting, the dollar is going to get weak. I still think the dollar is going to get strong, but not until the Fed meeting in that case. But you would still plan it like this. You're going to plan it like a breakout. So it's going to, let's say, let me draw it this way. News comes out and just pops. Gets up to 113.50. Where is it? 113-ish, 113.40, 113.50, right? Pull back and then up again, something like that, okay? You never have decision, you just take the risk is just gambling in the news. Huh, wow, you don't really know me at all, Chubby. All right, cool. So that's kind of one thought process. Now remember, either way, between now and the Fed meeting, I do expect dollar strength. I do expect yen strength. I do expect Swissy strength, but it has nothing to do with fundamentals per se. And it has nothing to do with technical analysis, definitely. There's nothing on this chart that would suggest that, so that's my alpha. Doesn't mean it's going to happen. All it means is I'm done with the yen weakness, for now, not forever, just for now, and I'm looking for an opportunity to make a quick buck the other way, and then rebuild, right? So I'm only talking like the next 5 or 6 or 7 weeks. Okay, so we'll see. And if it doesn't happen, it doesn't matter because I'm not in it. If it does happen, then hopefully I'll make some money, right? Okay, so the volatility trade, the volatility trade, let's go through that quickly. Okay, this is a high volatility event-driven strategy. Okay. Yeah, so Chebby, I've been doing this one webinar at FX Street for almost 14 years. Stick around, bro. Stick around. You'll learn a lot. What is this? Huh, I don't remember adding that. So yeah, I started spring of 2006. Yeah, cool. Huh, I don't remember. Why did I make this slide? It's cool. I'm like, oh, look at that. Yeah, at this conference in, where was this? Shenzhen? They made me a Forex educator, best Forex educator or something. It's good. All right, so let's go to the high volatility event-driven strategy. Skip, 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 skip. Okay? This is the same slides I showed in 2006. Okay? Whatever happens, we're going to get some sort of volatility. These are 1-minute candles. If it goes green, 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 this is what I'm going to say. Oh, guess the market interpreted the Fed is what? Done cutting interest rates. That means it comes out a good number. Non-farm payrolls today comes out a good number. And everyone says, aha, the Fed can't cut if we got like $1.85 on the NFP, right? So the dollar just weakens, right? And so you get green candle, green candle, green candle. And I say, okay, great. I guess the market interpreted the news as bullish. So now, as a bull, you don't buy high, you buy low. But pay attention to where it stops going up, and you get to the next, right? And you get the down candle, great. This is what we're looking for because we like to buy low as currency traders, right? Up, 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 down, down, buy is what we're looking for. Pay attention to the line in the sand here, as I say in my book, because there's a reason it dropped here, and it could be very important in a short order. So anyways, typically I'll do something like I'll look at a fib retracement. Another thing I do is I look at this old resistance and expect that to be support. So typically I'm going to be long in here. That's very typical. It's just price action. There's nothing to it. Okay? Even an Elliott wave dude would do it. But in this case, it's not a perfect example because it goes a little lower, but nonetheless, it drops down into a 786. It doesn't make a lower low, and then it holds, and then it holds, and then it holds, and then it holds. And I must remind you, we're scalping a high volatility event. And if it holds for 2 or 3 or 4 candles, dude, you know, you're supposed to be quick on the draw scalping. There's no time for a committee meeting or a group hug here. You're either going to do it or you ain't going to do it. And if you do it, you pull the trigger somewhere. Oops. You pull the trigger somewhere in here. And you put your stop just below the lowest low. And you're risking what? Let's say with your spread stuff, you're in at 70. Your stop is just below 50. So you're risking 25 to 30 pips max. Okay? Yeah, Chebby, you can skip news trading altogether. Absolutely. Totally agree with you. You could totally skip it. Okay? All right. So anyways, so if you lose today more than 30 pips, you're not following the rules of engagement. You're not listening. It's your own damn fault and nobody cares. Cool. And let's see what happens next. A few minutes later, if things go well, if things go properly, you should be up near the line in the sand again. Remember how I said pay attention to this? Well, when we get here, there's only 2 things that are likely to happen. This breaks out and goes up, or whatever rejected it the first time holds, and this drops, and therefore you'd lose money. So if you're long here around the 70 mark, as you near the line in the sand, you should move your stop, which was down here, to break even. When you get to the line in the sand, you need to be hero or zero. If it drops on you, you lose nothing. If it heads up, you make profit. Okay? It's just a scalp, right? You don't want to have any pride on a trade like this. Just paying attention to the clock. So when it's looking like that, you should have nothing to lose. Now, Fibonacci obviously tells you that this should do something like this, but it doesn't have to because of the fundamentals, right? It's really a fundamental play. You're just trading the volatility in response to a fundamental play. And of course, in this example, pachow, you got paid. Great. It could have easily collapsed and you lost nothing, but you had the opportunity. Okay? And that's really what you want, right? Daniel says, doesn't matter because it's only 30 pips. You know, this non-farm payrolls, when we started 14 years ago at FX Street, it would move 300 pips in like 3 minutes. Okay. So it doesn't really do that anymore. So you don't really need to scalp. You know, you need to know how to trade small time frames, because I'll plan my trades way out here on a 4-hour, and then I'll drop into a 15-minute. And once it's confirmed, I'll drop into a 1 or a 5-minute. And that's where I take my trades. But I plan everything on like a 4-hour. So here's the plan, guys. We'll observe the news on this chart on euro dollar. And then I'll do around the world. We'll take a look at a whole bunch of other currency pairs. We'll also look at gold and oil. Yes, right, T-Lag? Like pound yen was a great one. If you can imagine, there was a time when I was trading USD yen, which has the smallest average daily range, right? And I made like in that day, I think I made like 200 something pips, and I was short. And we hit this line in the sand I said would be important. And I remember because we hit it and I'm like, yay! And then it dropped 300 pips in like 2 minutes. It took me hours. It took the whole day to make 200, which is huge on USDN. And then 3 minutes later, another 300 pips. Like, when do you see that on USDN? And I remember I hit close, like, oh my God, out. And it slipped something like 150 to 200 pips. By the time I got closed, it had fallen and came back 200 pips. And I only got 300, I guess it was, on that one. And but we don't live in days like that. Like, USD yen doesn't move 300 pips a week. Can you imagine 300 pips in 3 minutes? Yeah. So anyways, yes, we'll go through all of that, guys. Oh yeah, watch the kitty CAD jobs. So we'll definitely pay attention to CAD, because CAD should benefit from OPEC producing less oil, because OPEC's trying to increase prices, even though I don't think they'll be successful at it. They're trying to increase prices, and if OPEC's not going to produce the oil, hey, Canada's going to definitely produce the oil. So that's pretty good for Canada, so I'd expect the Canadian dollar to be happy with that. Okay? And then if you have a good Canadian NFP, then that's more good news from Canada. More likely what you'll have is mediocre to bad news from Canada, probably mediocre. And that'll just be offset by mediocre OPEC news, and it'll just kind of for shizzle, dizzle, nothing. Oh, I definitely love scalping. What I'm saying is, it's just the best part of knowing how to scalp is knowing how to enter your trades at very refined prices. So when you identify support and resistance, and you can scalp on a 1 minute or a 5 minute chart, your entries are very, very, very close. So you're like on top of support and resistance when you get your trades. So it helps your entries. Okay? So if you have to wait, like, let's say you're not very good and you have to wait for a 5A cross on a 15-minute chart, dude, that could take like 45 minutes to an hour to get that. And you may have lost 30 pips because your entries are not so precise. No, we'll do gold shortly. Are you talking about someone else? Oh, why are you talking about somebody else? Yep, just watching the clock, guys. Let me remind you that trading's risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. And remember, guys, if you don't really know what's going on, it's a fantastic, amazing idea to not do anything. So this webinar has been going on for almost 14 years. Spend a couple of more months hanging with me and before you start looking to trade, okay? I'll take care of you. Yeah, don't get people esoteric. Don't get people off focus, okay? Yeah, I preach to teach, so. How many people attend my daily webinars with Traders Way? Oh, that's totally fine, Cavill, right? Hang, man. That's what it's all about. Brooke. All right, Brooke's doing the countdown? Right on, guys. Thank you for the loyalty and respect. Okay, we got some downward movement here. Dollar strength. That would tell me it's a reasonably disappointing number. I don't know what it is. I'm not looking at it. Doesn't really matter. Dollar very, very strong right now. Oh, 266. You're killing me. Huh. Well, dollar strong. That's weird. I'm okay with that. That makes me think it's going the wrong way. I'm worried about a snapback now. Cool. It's amazing, huh? 266. It's really good. Makes me think it's going the wrong way. Okay, so our pre-news analysis said that a bounce is expected somewhere. So it would either be here or down here. Okay, so somewhere between the 70 and the 50 line is probably where you'll see a bounce. And then you know, up and then a down, if that's the direction you're going. And remember, if this continues, your trade plan is probably going to look like this. It'll head down today, then there'll be a retracement and down. My worry is that this is really going the wrong way and it comes down and then comes up and then comes up. But bear in mind, this benefits me, okay? Which is even funny because I wouldn't expect this to head down with numbers like that, but it's still working for me. So what if it's just pure seasonality? What if it's just seasonality? Very cool. Then it's even more powerful than I explained. So let's see. If you are a bull, you're looking for support, and that's going to be down here between 110.60 and 110.50. Okay? So get ready, counter trenders. Okay? So let me do this differently. So let's say you're a bull now. You're going to play it like a range. Let me just get my drawing tool. You're going to play it like a range. You're going to play it like this. Okay? And at the very least, back to the top of the range. Okay, bulls? Because no matter how you look at it, no matter what your bias is, that's support. That's support. Okay? You join the daily webinar by going to tradersway.com and opening a demo account or a live account. Live accounts take time because of compliance, but you can open up a demo account in just seconds. And then in your back office, there's a button that says live webinars. And I'll see you on Monday. Tradersway.com. All right. You know what? I'm just going to clean this up. Well, I don't want to destroy the support and resistance here. I want to put this back to candles. I just find them easier to see. Okay. So get ready for your up, up, up. We're still stuck on 170. Okay. We have this, which is candlestick bottom. Then we have this, which is sort of market bottom. So we'll see how the market and the price overlap. Okay. Don't sell now. Okay. Remember the rules of engagement. So it gave you 3A2 Fibonacci retracement on the first minute. Okay. I don't like it though, but get ready. Get ready for the up is what I'm thinking. Because here's, like I told you, that if the number is good, the Fed's not going to cut interest rates. If the Fed's not going to cut interest rates, then nobody's going to front run the Fed by buying bonds. And if no one buys bonds, then interest rates don't fall. And if people are not buying bonds, then demand for dollar diminishes, which weakens the price. So this should have euro dollar going up. I'm just happy that it benefits me because I said dollar strength, more specifically, I said yen strength and Swiss franc strength, right? So like we could take a look at, what's another common one? Well, instead of euro dollar, why don't we look at euro yen? Okay. And dollar strength and yen weakness. You're like, what? Right? So this is sort of wacky dogs living with cats kind of stuff. So let's see what happens from here. I'm suspecting there's a flip. Let's take a look at gold. What happened on gold? On a 4-hour chart, virtually nothing. On a 1-hour chart, a little bit of wackiness here. Like, there's not a lot going on, but there's something going on. Okay. So if we were to break this down differently, I know there's enough lines here where it's probably confusing some of you guys. This is old analysis, obviously. So let me delete some of this out. Oops, gold. Let me delete some of this out, and then we kind of go through the logic. Bulls, right? Gold bulls, right, are buying in here. Let's make this green for buy. Okay, bulls are buying in here, and they did on Monday. Okay, and bears really want to sell a little higher. Remember, selling higher is always better than selling lower. So it's not a buy anymore, and it's not really a great sell. I mean, you got a little bit going on here, and but the better is up here. So there, right now, gold is quite mediocre on that time frame. Now, if we switch this out and look at it from a different point of view, right? The theory of relativity, it's all relative to where you're measuring it from. So let's go here. And it's way overbought on a weekly basis. Okay. Now, do you remember where I said monthly bulls were buyers? That was in this price range right in here. Okay. And the ultimate target for that week was here, and it went even higher. So it's been very, very bullish, and it's not very bearish. Like on a higher time frame, it's not really that bearish. It's medium bearish. So I'm wondering if this happens next week. Does that make sense? That means weak dollar. A dollar reacted strong versus the euro after news. So this support level would have to hold for that to work. And if that's going to work, what you want to do is look at this zone today, and between now and Tuesday, if you want gold to go up, if you want dollar to go down, you're looking for some sort of reversal pattern here, and then resumption of an upward move, which actually began way down here. And you're trading it like that. Okay? Notice, like, if this area here holds, we're still above this, right? If you're down here, that's dead. That's dead. Okay, that's that. Cool. Hey, if you guys are on YouTube, would you do me a favor and click the like button? Show some respect to FX Street. We're guests on their channel. I've been doing this webinar almost 14 years, but I've been working with FX Street for probably close to 17 years. Isn't that amazing? Oh, thank you, Hope. Thank you, Daniel. Cool. Let's take a look. So anyways, this 70 is still holding. No real retracement, so there's no second chance right now for scalpers. Okay? Okay? Remember, if you're following the rules of engagement, if you didn't take the first retracement, you're still looking for something like this. Okay? This noise down here is not for shorting. You see all of this down here? That's support. Okay? There's a very reasonable chance that we get a significant upward move. In fact, 100% retracement is kind of what I'm thinking. So there's no way you'd be shorting this again down here. Now, if you are a hardcore bear, then here's your 382, here's your 50%, here's your 618. So looking at that, that would be your sweet spot, kind of like this. And that would be, you want to sell high. And where we are now is not high, right? So you can't think of it. But if you're a bull and you're like, hey man, under these fundamentals, if the Fed ain't going to cut anymore, then the dollar's going to weaken. This went the wrong way. Probably some profit taking by those that were long, that brought it down. And now you should be buying it up. And not only are you buying it up at 110.70, but you're probably on your way to like 112, 113. Like you're actually trading next week's trade. So let's take a look at that idea. Okay, let's take a look at that idea. If your next week's trade, if you're a bull, is very straightforward. Let me highlight this for you. Okay, a buyer here, okay, is targeting this. So it's not even 112, but it's not a lot of pips. But this is what you got going, okay? And that is all confirmed by this level here, which is next week's central pivot point, which actually predicts next week's weekly R2. So that gives you 111.79, okay? Is what your trade plan is if you're a bull and you're thinking about buying now. Okay? 111.79. Yeah, hey, Kevo, I know you're being interactive and such. Just be careful. Don't be distracting. Be be interactive. That's cool. Just don't be distracting. I'm looking down and there's like overly active conversation. So just don't be distracting. Okay. I have an agenda here. I'm trying to teach people, so don't distract. But I appreciate your level of interaction. Just make sure you're not a distraction, okay? We don't need arguments. So we got our bounce here now, guys. So if you are a bear and you want to try again, you have permission. I just showed you this is our sweet spot. If you want, you can do it. Okay? So remember, this is where here and here are bullish entries. Bears are looking for this. I still think it's going the wrong way, but whatever. That's what a bear is looking for, somewhere between the 50%, 618. That's all good. Okay? I hope, whatever. What I hope doesn't matter, I suppose. Let's take a look at some of the other pairs. See if we can get through this volatility. Ooh, we're right back on my line. I can't bear to look at it. CAD news doesn't seem to have been very good. Cool. And then let's look at Swissies. Ooh, Kiwi Swissy. Ow. Kiwi. Just taking a look. These are all old trade plans. Didn't quite come down as low as I wanted it to. Therefore, it went a little higher than I've wanted it to. Testing my patience. This is still a reasonable area here. Very reasonable area. So I would look at this and say, I wonder if it'll fall. So I'd get off the 1 hour now and I'd look at the 5 minute or a 15 minute and I would look for a reversal pattern. So I can see there's some challenging times here. The market's trying to figure it out. And of course, I'm not trying to figure it out. I'm just trying to figure what price I should sell. So I either sell in here or I sell up higher, right? So in this mess, I'll probably just trap this. And what I'm looking for is probably a breakout, a pullback, a sell kind of in this area, and a down. And because once again, I'm not saying it's going to be bearish. You don't misinterpret. I'm not saying it is a bear. I'm not saying it's going to be a bearish move. I'm saying if Aussie Swiss franc falls here, I'm going to take a shot. Not based on fundamentals, not based on technicals per se, but based on seasonality. Okay? Make sure you understand what I'm saying to you. You trade them all, man. Trade them all. I look at all yen pairs, all Swissy pairs, and all dollar pairs. And to me, there's only 3 individual trades and one set of analysis. Okay? I'm a macro trend trader. Okay? That's the basis of what I do. So macros set up the strategy. The trend is analyzed through technical analysis. Okay? And that's that. Who are you talking about, esoteric? This is my coaching account, dude. All right, so let's take a look. Yeah, Beast. Yeah. I wanted to look at the CAD though. Okay. Looking at this, we've already blown the doors off the daily. So let's switch it to weekly. Daily trade is dead here. Let's go weekly and see where we're going. Okay, weekly. Oh yeah, I remember this one from earlier. The weekly basis is funny because it was really dead. So this was a sell entry, and this is the target, and this is the counter trend, which you would assume in a situation like this. If you hit this target this early, then you assume the reversal. You're only assuming to here, but it went all the way here. But that's an R1, and which then creates a higher high. So then yesterday, I think it was, I said, well, look, I need to be neutral. I'm bearish, but I'm bearish neutral because I don't like selling higher highs. That's what I said in yesterday's training. I don't like selling higher highs, and no matter how you look at that, that's a higher high. And even though I'm a bear, all this kind of stuff. This was a piss poor entry, by the way. And I talked about it yesterday or the day before in the webinar, why it was a piss poor entry, but why I took it and what psychologically led me to take it, right? So I talk about the bad ones as well as the good ones. And so anyways, I know the seasonality of the trade. I know how much money I'm willing to risk on it. And I'm still surviving. And in this 2 week period, in this 2 to 3 week period, I try to be as patient as possible because I understand I'm a first mover. And first movers don't have advantages. They just have costs and risks. So now we're back below and I'm profitable again. It doesn't mean I feel good about it, but I feel better about it. And of course, if it went a little bit higher, I would have been knocked out. And I lose some money. It's not a big deal. 50 pips. Not a big deal. But if I can survive this, I should be short for like 9 weeks. So like the first week of December, second week of December, third week of December, fourth week of December, first week of January, second week of January, third week. So 7 weeks. So if I'm not going to move the stop for a while. So this stop is going to stay there and the max I can lose is 50 pips. And my intention is to lose 50 pips or be short for 7 weeks. Now, here's the thing. I told you I was going to do this in March, and April, and May, and June, and July, and August, and September, and October, and November. And last week I said, I'm getting ready to do it. I'm getting ready to do it. I'm getting ready to do it. So there we are. What's up, Moat? Yeah. Yeah, I spoke to David a few weeks ago. He's doing good. Still the greatest guy ever. Chris is a scumbag. But David's great. And I haven't heard from Kurt for a while, but he got some like high-end data science scientist job. And he put me down as a reference. So I helped out there. But I haven't really spoken with him. And that was probably 3 years ago with him. And Rob always wanted to like snowboard and surf. And last I heard is that's what he's been doing. So good for him. How are you doing, Alistair? Ali says it's not a yen play. Well, it's a profit-taking play. So here's my idea, guys. If you think about the seasonality, let's say you're a hedge fund manager. You make what, $150,000 a year, like not a hedge fund manager, but like the portfolio manager in a hedge fund. So they pay you a flat fee of 150 grand plus some sort of bonus at the end of the year. Okay? Now, most hedge funds are not Forex funds, right? They're long, short equity, or they're bonds, or they're arbitrage, or they're neutral, or they're smart beta, or they're convertible, but they're generally exposed to the overall market, aka like stocks, for example. You don't get paid till you get cashed out. Okay? I bought Apple at $6 a share back in the 90s. I didn't get paid until Steve Jobs died and I cashed out. So it's just paper money till you cash out. Okay? So as we approach year end, there's going to be some profit taking. Some profit taking happens before the year end. And generally that's losing trades. So you dump your losing trades in the middle of December because you get to use that as a wash sale against other forms of income that you're making. And by you, I mean now your client, right? So you take some losers, you get rid of your dogs out of your portfolio, and you benefit from the tax treatment on your losers because you wash off like any other gains you made elsewhere in your portfolio. Then in January, you cash out of your winners because you're deferring your taxes. See, if you cash out of your winners in December, you pay taxes in April. If you wait 2 more weeks, January 1st, you take profit on your winners. Now you pay in April 2021. You defer your taxes 16 months because you waited an extra 2 weeks. So in this part of dumping your losers and then dumping your winners, it creates downward forces in the space-time continuum, right? Now, AKA, the stock market's going to fall in the next couple of weeks, and I'm going to benefit from it. This is not fundamental. It's not technical. You don't see it on your chart yet. This is human nature. This is how the market works. Now, if not a lot of people do it, then you're not going to see much of an effect. And then you'll be able to point your finger and like, Wayne, you were wrong. Well, you know what? I've been right many years. Not every year, but many years. So again, none of this exists on the chart yet, but watch me do it. In fact, so I'm going to do it. Is there anybody in this webinar that can confirm I told you I was going to do this at least 6 months ago? Is there anybody here that can say you knew 6 months ago that in this period of like this legit, like literally this week or next week, this kind of 2-week period, I was going to do this? And if that's the case, obviously I've had a plan, right? Okay? Ali says, yep. Look. Yep. Mathai yes. Jean-Guy, yes. Jacquel, yes. Abhishek, 100%. Joe, at least 6 months. Chris, yes. Kyle, yes. Jim, I can. Lucas is saying it's so much better. Yeah, you're here. Now, isn't that interesting? It's not that I'm right. And here's the thing. If you hang with me for a while, I will open your mind to something. Your profits are not going to come from you being right. Your job is not to outsmart the market. That's a fool's errand. Okay? What you need is to do some basic research and come up with a general opinion. We call this a bias. Imagine you were a hedge fund manager and you were talking to a potential investor. And they're going to say, okay, well, what do you do? And you're like, I'm a Forex trader. I'm like, good. So what's going to happen over the next year if I give you money? You're like, I really don't know. I have no idea what's going to happen. Every day I just open my charts and I don't know, I look for the next 25 pips. You're not going to raise money, dude. What is your tradable point of view? Where do you fit in the portfolio? Oh, I think the yen's going to get strong. Oh, I think the stock market's going to go up. Oh, I think the Fed is done. Oh, I think this. I think that. I have a plan. Here's why I think this. If you look at the balance of trade in Australia and what the Reserve Bank of Australia is saying, each of its board members, right? And you take into account what's happening in China, my opinion is for the dollar, Aussie dollar would be XYZ. But how does that fit in global macroeconomics? Oh, well, then that's good. Factories around the world will be good or bad or whatever it is. But you need to be able to say, this is what I think. This is my bias. If you gave money, this is what I would do with it. If you can't answer that, you're not a professional currency trader. Now, you might be a scalper or something, but most likely you're not making big money. Even if you're a great scalper, you're not driving a yellow Lamborghini. You might want to, but it ain't going to happen. And so let's say you're actually a really good scalper. One day you're going to get frustrated not making real money. So you're going to jack up your leverage and blow up your trading account. Cliche. There's no worse death than dying as a cliche. It's not what your mama wanted for you. Okay? So you need to look at this bigger. You need to look at this like as a profession. And for you to raise money from a potential investor, they need to know where you fit in their portfolio because they already got money. If you're talking to a rich person, you sound like an idiot. If you go to a rich person and say, I can make you really rich. I can make you a lot of money fast. They're like, dude, I already have a lot of money. You sound like a peasant, like you're going to gamble all my money. Like, I don't want you to gamble my money. I'm already rich. So now you have to explain like where they fit in the portfolio, and therefore you have to explain what you're going to do and why you're going to do it. And they're like, they might be impressed, they might not be. And then once they're like, wow, that's really interesting. I love your point of view. You're so smart. Yeah, sure, I can give you some money. And then they're like, so what's the risks associated with this? And they look at your trade history and you're a degenerate gambler and like, no, that ain't going to happen. Look at the risk-adjusted returns for this guy. If you account for the risk, this guy makes zero. He's negative if you account for risk, right? And they're like, boom, you're dead. So you have to have a bias so people know, like, what are you going to do with the money? And second of all, you need consistent, low volatility returns. You need to look at your trading from a wealthy person's point of view. If they invest money into you, they're not going to invest into a bond. They're not going to invest into real estate. But what is a bond? What is real estate? Cash flow. That's all they're interested in is cash flow. Number one rule, don't you dare lose the principal, not even a penny of the principal. And then the second thing is, what kind of cash flow can I count on from your trading? And then they look at your trading, you're plus 22 one month and down 12 the next month, and then plus 3 one month, and then up 19%, and then down 7%. And they're like, what the F is this? That doesn't look like a guaranteed cash flow. If the guy just buys an apartment building, he's going to collect rent every month. If he buys a bond, he's going to get a coupon payment and his money back. If he gives it to you, he doesn't know what the hell he's going to get, right? So you got to like calm everything down, look at the bigger picture, develop a fundamental bias for the entire global market, break it down into bite-sized pieces, each economy. What's Australia going to do? Why? What's New Zealand going to do? Why? What's Canada going to do? Why? What's the United States? What's the UK? What's Euro? What's Switzerland doing? And why? And then clearly and intelligently explain the next 3 to 6 months. And once that's explained, how can you, with low volatility and low leverage, develop consistent returns? And by the way, you're leveraged 50 to 100 to 1. You need to have better returns than a bond or a real estate, because a real estate deal is only leveraged 4 or 5 to 1. You're leveraged 50 to 100 to 1. So you better have some nice returns. Otherwise, your risk-adjusted returns suck. Okay? What's 5% a month compounded for a year? Almost 100%. So the next question is, can you produce somewhere between 2 and 6% return per month? Month after month. Sometimes it's 2, sometimes it's 5, sometimes it's 10. Not often though. Once in a while it's break even or a -1, but most of the time it's 3, 4, 5. Right? September, 6%. October, 6%. November, 5%. December, 4%. January, 3%. March, 4%. And just boom, 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 boom. And it's over the course of years. And someone looks at your returns and they're like, dude, you are steady. Yeah, I am steady. But notice how if you're stuck on the small time frame only, you're only doing 15-minute charts, you're only scalping, you're only making 20, 30, 40 pip winners, 20, 30, 40 pip losers. You're not producing what is required by the market for them to invest into you. You're not competitive. Okay? So I have no problems for you taking small time frame trades, but for you to be successful on the long run, you will need much bigger trades. Okay? 300 pips, 400 pips, 1,000 pip trades. You know it's true. How many people know for a fact, have heard it a bajillion times, the secret to success is letting your winners run? How many people would 100% agree with that? The secret to success is letting your winners run. When you're right, you're very, 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 very right. And when you're wrong, it's no big deal. I lost 30 pips, whatever. Got chunks of corn bigger than that, right? Then how could a 25 pip winner and an 18 pip winner and a 32 pip winner, adding those up into success doesn't add up. It doesn't make mathematical sense. Okay? You will never make it. If all you're doing is 12, 13, 14, 20, 22, 23. Oh, look, I got a 50 pip winner. If you, take into account your losing trades, your break-even trades, and the amount of time you put into trading like that, you're better working at Taco Bell for minimum wage. Because A, you're guaranteed money for your time, and B, you get free food. I wrote in a book somewhere, it was a Wiley book. Which one was it? It was the one published in Australia, Wiley publishing in Australia. But I wrote that, if you don't learn these things like buy low, sell high, everybody knows it, and keep your winners, keep your losers small, let your winners run. Those are basically the two rules, right? That everybody knows. And they're so important. If you don't get that, in the book I wrote that you'll find yourself 70 years old working at Starbucks because you can't afford your health care, right? And you get to eat day-old bagels when you get the 6 a.m. shift. You're setting up the tables and sweeping at 5:30, and you get to eat the old bagels, and you're like, thank God I have this job at Starbucks. I used to be a currency trader, but I couldn't hack it. What's the other guy doing? I used to be a currency trader. It's a tough racket. And drinks himself to death, right? Look, you can't do it small time only. I don't say you can't scalp or spot trade, but spot trades get you 50 pips. Day trades get you 100 pips. Swing trades, right? Weekly swing trades gets you 150 pips. Monthly swing trades get you 300 pips. Position trading gets you 1,000 pips. But to understand that, you have to have a bias. Otherwise, it's impossible for you to predict the future. Like, what's going to happen? Like, I have no idea. So the goal isn't to be right. It's not that you have to be so smart. Okay? This above me right here, that's a macroeconomics degree from Harvard University. Right? Senior economists at the Fed, at the Boston Fed, and at the New York Fed taught me economics. Not required to be a success at Forex, however. I just do that because, I don't know, chicks dig it. The important part is that you make a decision. I don't care what it is. You can be a bull, you can be a bear. But you need to make it on some kind of intelligent research. You're a bull or a bear on the Aussie dollar because of something at the Reserve Bank of Australia. You're a bull or a bear on the Canadian dollar because of something you read at the Bank of Canada's website. Your analysis of the Federal Reserve Bank of the United States of America makes you a bull or a bear. Okay? From there, now you know what you want to do, and you can justify it. Either, right, to yourself, to your bartender, to your God, to your clients, to whoever, to whomever, you can justify what you're doing, but you're also now thinking ahead. So you're like, oh, CAD yen's coming down. Well, I know I told you 6 months ago it would. Not just in general. See, last week, so like, check this out. I was a bull here. Think of this. I was a bull here since August 23rd. I was a bull on this pair. August 23rd. And here, I was a bull. I was long, making money. Hundreds and hundreds and hundreds of pips. And here I got out. Then it dropped. And then it came back up. And I tried shorting again. It was a piss poor entry. I know. I was on some other trades and I missed the first one. And I thought it was being conservative. But then the OPEC news, Bank of Canada news really jacked this volatility up. And so I got a crappy entry. But I was never risking more than 50 pips. And I can afford that. All right. So anyways, okay. But the thing is, I have a plan. Am I right? I don't know. But that's the thing. Stop trying to be right. What I want you to do is make a decision hardcore based on real, intelligence. And then be consistent. Write this down. The secret to success in trading is not being correct. The secret to success in trading is being consistent. Do you understand that? I want you to type the word consistent to manifest this physically, not just mentally, intellectually, or emotionally. I want you to physically manifest this. Type in consistent, or if you prefer, consistency. And let me know if you're following here. Okay? The secret to success is not being correct. It's being consistent. If you're consistent, you have a strategy. And then, because you're following a bearish strategy or a bullish strategy, now you know what to do before you've even done it. If you are a bear, you sell at resistance. And if you are a bear, you prefer to sell at resistance when the entire market is falling. If the market is not falling, you're like, oh, I might sell at resistance, but I don't really like these market conditions. Great. Thumbs up. But when the market turns bearish and price rises up to resistance, you destroy the market and tear it down. And then you make a lot of money. Woo-hoo-hoo-hoo! And then the markets change and you're like, whoa. What's this higher high nonsense? And now you know to back off. You know what to do. You have clarity through your intent. Or, let me quote the great Jim Morrison. He was a poet, not a singer. He was also a singer for the Doors, but he was a poet. The Doors wrote music around his poetry. Here's what Jim Morrison wrote about the way you used to trade before you found Wayne McDonell. Let me tell you about heartache and the loss of God, wandering in hopeless night. That's how you used to trade. Do you remember what it felt like when every time you pulled the trigger, no matter what you did, you'd lose money? You remember how you felt? The heartache and the loss of God, like the meaning of everything is just gone. And there's this huge chasm in front of you, this dark abyss, and you're just going to melt and die inside this darkness. I've been there, man. I've been there. Holy smokes. Is it tough to be a trader when you go through that? Let me tell you about heartache and the loss of God. Wandering in hopeless night. Does that describe your old trading? Sometimes you're long, sometimes you're short. You never really know. Oh, I guess it ain't going down, so I guess I have to buy. Like, wow. It's monthly, Barry. It's monthly. So we need to fix that. I will fix that for you. I will fix you. I will fix you. I think that's a Coldplay song, right? I will fix you. You just haven't had the right mentor to show you the way. Wandering, hopeless night. What are you going to do tomorrow? I don't know. What are you going to do next week? I don't know. What are you going to do in January? I really don't know. It just doesn't even make sense, right? Oh, you guys are talking about the swing trading group? Yeah. All right. If you want to join my swing trading group, I've added the swing trading course for free. That used to be $1,000. Now it's free if you join, or it's included if you join the swing trading group. Swing.FX Bootcamp. Oh, I'm not going to be able to pop it in there, right? Yeah. Maybe the moderator could do that. Swing.fxbootcamp.com. Out here, there are no stars. Does that describe your trading? Like, how are you walking through the desert at night? You have no GPS. You have no sextant. You can't even follow the North Star because it's cloudy, right? Out here, there are no stars. Like, if that describes your trading, man, we got to fix that fast. Okay? Yeah, let's do some oil, huh? Or do you want to do exotics? Let's do some exotics. Thank you, moderator. I appreciate that. Look at the stars. Look how they shine for you. And everything you do. Moderator. Yeah, cool. Got to fit that Coldplay in once I said, I'll fix you. All right. Here's an entry. Wow. Okay. The other one's here. So I'm really, I probably should have taken profit on it, but I've fallen in love with my babies. And it's not really, I don't know, it's not the right thing. I probably need to bail on this lower one. But here's one thing I want to talk about. That trade pays me 1,100% a year in interest payments per year, plus pips. And right now, okay, I'm up more than 1,000 pips. And like Wayne, you might say right off the bat, Wayne, that's euro, Turkish lira. That doesn't count. Well, first of all, I'm talking like if this was euro dollar, 1,000 pips on a mini lot is $1,000, right? I'm up more than $1,000. So it's equivalent to 1,000 pips on a euro dollar trade. But I've made almost $700 collected already in the bank, can eat it, can spend it in interest. Already collected, already paid to me. Plus this. So right now, this one trade, well, let's take a look. I've lost some action lately. So 1,100, let's say, plus $650. So I'm up 1,700% on that trade. Oui, oui, as they say in France. Right? 1,700% return on investment, huh? What do you think about that? Whoop, 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 whoop. Gotta love that. Love that. I'm going to, right? I can friend that all night long. So that's pretty cool. This one is a Euro ZAR, South Africa Rand. What's up to my South African brothers and sisters? You got to do Cape Town, I'm telling you. Not next year, though, 2021. Yeah, well, 2021. I got to plan something. 2021, Cape Town. We got to do something. Put it on your calendar. No. Well, look, my trade didn't kill kids in Syria. But I know what you're saying. That's your alpha. Okay. Here's the entry on this ZAR. My stop is here. So I have, I don't know, like 500 pips locked in. Worst case scenario. And we'll see if we can get this lower. And we've been stuck here for a long time. But it's all right because I'm collecting interest, right? And it's not as high as the lira, but what am I think I'm making, what is it? Does anyone remember? I think it's like 750% interest per year. So what I'm doing, like for Turkey and for South Africa, they've borrowed a lot of money in dollars and in euros. And there's a shortage in their vaults of the euro. They've borrowed too many. Now they have to pay it back and they don't have enough euro. There's a shortage. And Turkey was in very serious problems. They literally didn't have euro. And it was really causing problems for them. South Africa is not as bad. They have a lot more exports. Turkey doesn't export nearly enough. And then they borrow too much internationally because it's so cheap. So they did what they had to do to get the job done, and then they had to pay the penalty, the cost of doing business later. But anyways, all I'm doing is I'm lending euro to these countries, to these emerging markets. That's all it is. Now, the lucky thing is I have US dollar. So I go to the European Central Bank and I'm like, hey, what's up, European Central Bank? What's up, ECB? I need some euros, brah. And they're like, how much do you need? You can have as much as you want. I'm like, really? That's cool. How much are you going to charge me? And they look at me and they're like, you can have it for free. I'm like, what? They're like, you can have as many euros as you want and you can have it for free. I'm like, no shit, really? Cool. So I borrow a bunch of free money from Europe. And then I say, hey man, who needs this money? Because South Africa doesn't have my credit. Turkey doesn't have my credit. I got credit. Okay? Street credit and bank credit. So anyways, so I zip over to South Africa and I'm like, hey, psst, psst, hey, you need some euro? I got some euro right here, right? Wait, those are my fake Rolexes. No, over here. I got some euro. How much do you need? And then I'm like, my price is 750%. That's cool, right? Well, it's actually 7.5, but I pony up $100 as collateral to Europe. They're not charging me money. It's just collateral. And they're giving me $10,000 worth of euro. So because of that, the 7.5 that I'm charging South Africa, that's 7.5% on the 10,000, but I only ponied up $100. So I'm earning 7,500 on the 100, right? On the $100. That's how that works. Isn't that neat? Okay. Well, Hope, you should look at it the other way. Perhaps you could look at it and say, well, maybe he's punishing Turkey by lending the money they desperately need, but at 1,100% interest. Just look at it as punishment if you want to look at it that way. But so anyways, I just want to throw out like exotics trading and stuff. So like that Turkish lira trade, I've been long since May, long lira, short. I've been short this since May, and I'm up 1,700%. You're welcome. Again, I'm showing you that there's something outside your 25 pip scalp. I'm not saying you can't do the 25 pip scalp. I'm trying to get you to see the bigger picture. Yeah, Hope. So what you do, Hope, is you make a bunch of money, get filthy stinking rich, and then support all the causes you want. The worst thing is to have, like, let's say, a good heart and a desire to help people, but you do not have the capacity outside of praying, right? Because if you don't have any money, you also don't have any time. That's the other thing. If you don't have money, you don't have time because you're spending all your time trying to find ways to eat, ways to get to work, ways to take care of your children, ways to not get killed, right? You're spending all your time on that. Once you got wealth behind you, time is a lot easier, right? You know what I mean? Time is a lot easier. I don't have to spend all my time at Harvard. I could just quit and have nothing to do all day. I could literally do it. I have friends that they don't work. They don't have jobs. They haven't had jobs ever for decades. 3 of my guy friends, they're 50-year-old men with gray hair. They haven't worked in decades. Like, so what's up? What are you doing? Golf. Again? Are you any better of a golfer? No. They golf 2, 3, 4 times a week. I'm like, really? Yeah, well, I got to go and learn something new, right? So, anyways, it's just funny. So, once you got some money, and you'll have time because of that too, Hope, because you won't have to like go to a job or commute. You know, that's terrible. What a terrible thing. Commute? You have to pay to go to your job? How horrible is that? Right? Can you imagine spending 1,000 hours a year driving to work, paying for a car, paying for the insurance, paying for the gasoline, paying for the maintenance, the tires and the oil changes and all that kind of stuff, and the hours and 1,000 hours a year of your life simply for the privilege of driving to your shitty job, right? Like, to work for that loser boss of yours, like, oh my God, right? So imagine you didn't waste time like that, right? And you got some money and you got the time. Now you can help the causes you want to help. You can make the contributions that you think are important. You want to feed starving children in Syria? Now you have the capacity to do it. Either fly your butt over there, right? Or donate money to NGOs that are going over there and helping starving children. And then do something about it. You have the capacity and you're like, I'm going to put money here because I care about it. I'm going to put money over there because I care about it. I'm going to put some time here. Okay? Right? I have 20 years, it's probably more than that, 25 years of nonprofit experience. I put my time in. So anyways, being rich is a wonderful thing. You should embrace it and you should try it. Because then you can make the contributions you want to make. Cool. All right, so let's get off exotics. What do you guys want to talk about? What time is it? We still got time. What do you guys want to talk about? Satoshi, I don't know if we've ever met, so I don't know how you can like or not like me. Everything, oil, oil, oil. Okay, let's do oil. People have asked for oil. Let's do the whole energy complex, if you don't mind. We can do oil. We can do Brent crude. We can do West Texas Intermediate crude, and we can do natural gas. Okay? And then Dennis wants to talk about how election years will affect the US dollar. Ooh, yeah, we can talk about that. Do I follow crypto? No, I don't. Richard says oil cut 500,000. We talked about that an hour and a half ago. You are correct. So we can talk about that again. What is that indicator on your chart that shows the tops and bottoms in green? They're pivot points. All right. If you want my chart templates, my indicators, my EAs, my profiles, template files, all of them. metatraders.com. So maybe I can post that and maybe the moderator can do that. http metatraders.com. That will cost $5. $5. It'll cost you $5, but you can have all my indicators, my EAs, my profiles, my templates, all that. metatraders.com. Okay? So yes, so here we are. We're at Brent. This is oil pumped out of the North Sea between England and Norway. Okay? This actually was a very interesting time in history that created all of this. So there was a time when virtually all oil came out of the Middle East, like specifically just Saudi Arabia. And the United States really took advantage of it, and really the UK as well. And you can think about the growth that the UK and the United States had through the 40s and 50s and 60s, well, really 50s, 60s, and 70s, that whole period. The United States and the rest of the Western world grew exponentially on cheap energy. And so the US really went in there and raped and pillaged the oil. And Saudi Arabia said, whoa, 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 you need to stop this. This is too much. You're taking advantage of people. And the Western world's like, yeah, we don't care about you guys. Okay? So they formed OPEC. They got together the other oil producing countries and they created a cartel. And they're like, they did this to fight back and say, look, right? If you don't treat us with respect, we will just shut this show down and you'll have no energy. How'd you like that? Right? So that's all of this kind of started. And then there was stuff going on with Israel and all this kind of stuff. And Saudi Arabia came to the United States. They're like, look, you're really upsetting the Middle East here. If you don't stop this, we're going to have to cut off the oil. And this was under Nixon. And the United States is like, we don't care. And they couldn't believe it. So there was this thing where the United States was expected to rearm Israel with weapons. And everybody knew it. And that was going to create a big war kind of thing. And so Saudi Arabia sends, like, it's so obvious, right? Saudi Arabia sends a delegation to Nixon's White House, sits down with Nixon and his advisors. And they're like, please don't do this, because if you do this, we will have to back up our brothers and sisters in the Middle East and embargo the oil. You will force our hand. We do not want to do this. Please don't resupply Israel. Everybody's watching. Everybody knows you want to do it. Please don't do it. Please. Because if you do, we'll have to do the embargo to support all our brothers and sisters. Okay? Doesn't benefit Saudi Arabia to stop producing oil, right? So anyways, so Nixon says, no, not to them. They leave, go back to Saudi Arabia. Nixon and his advisors go, yeah, we should do it, but let's do it super secretly. Let's send in the weapons in the middle of the night. We'll go in hot with C-130s and we'll go dark. We'll go in low, we'll go in fast, there'll be no lights on, we'll just fly into the dead of night, drop off tons and tons and tons and tons and tons and tons and tons of weapons, and nobody's going to notice. Like, good plan, right? So anyways, Nixon gives the go. Green light, let's do this secret black ops stuff, right? And so the military and their brilliance, they're delayed, they're delayed, they're delayed. The sun starts rising. They go in anyways. So anyways, over Israel at noon, C-130s start flying in, dropping off weapons to Israel. And Saudi Arabia's like, oy vey, really? So anyways, OPEC does this embargo and oil goes from $10 a barrel to $50 a barrel now. And there's huge lineups because of the gas shortages in the United States. If you've seen pictures of this where there's hundreds and hundreds and hundreds of cars as far as you can see, all lining up to get gas. And while they're waiting, they run out of gas and there's no gas at the gas station. And it's a total mess. What happened? Well, at $50 a barrel, because gasoline comes from oil, right? It's cracked and a product is produced. One of them is gasoline, right? So at $50 a barrel, suddenly the British and their Norwegians can afford to drill deep, deep, deep into the North Sea. And the North Sea is not a hospitable place. You don't like hang out in the North Sea. It's huge, rough, cold seas. And the oil is down, 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 deep, deep, deep in the water, and then deep, deep, deep below the surface of the earth. Very expensive. But at $50 a barrel, we could totally do it. Pachow! So the UK responds by, hey, then let's start drilling our own oil. Brent. And by the way, at the same time, the United States says, you know what, at $50 a barrel, the oil up in Alaska is viable. So the United States starts drilling oil in Alaska, and the UK starts drilling oil in the North Sea because of the incompetence of the Nixon White House. Amazing, right? Amazing history. Brent is that North Sea oil. That comes from right down the line. You know, part of it is owned by Norway, part of it is owned by the UK, but it's out there in the North Sea, and that's what this Brent is. Okay? Pretty interesting history. So, Brent is international. West Texas Intermediate comes from Texas, the western part, right? So anyways, so there's quick oil, right? So anyways, we're looking at this, and oil was down. Now oil is up, and this has to do, well, first of all, all of this move here, where markets preparing for the OPEC meeting this week. Now I talked about the oil OPEC meeting last week, and then I think on Monday, right? Oh, is that right, Peter? I didn't think the Dutch had a lot of oil. I mean, some of it, right? But like, I wouldn't describe the Dutch economy as an oil economy. I think what they do is the ECB pays for poor countries, and the Germans bail everybody out, and then the Dutch sends their money to Germany to bail out the Germans. But anyways. Is that right, Leonardo? Hey, we should get together and have some cocktails and a cigar. I'd love to talk oil history with you. Right? So anyways. The OPEC meeting is something that we talked about on Monday with my group. So again, if you want to join my group, visit tradersway.com, open up a demo account, and in your back office, there's a link to my daily webinar. So it was something that we talked about and prepared, right? Yeah, Ali, you have to put it together. ECB pays for the poor European countries, and then the Germans bail them out, right? And then the Dutch bail out the Germans. The Dutch never get a fair shake. Okay, so anyways, so this OPEC meeting, they were expected to cut, and then they did cut. The problem is, okay, they cut, so oil prices should go up. But I don't think they really cut enough. I don't think 500K is, it should have been at least 1 million, maybe 2 million, but that would have been really aggressive. That would have been great, 2 million. 1 million is really what it should have been. 500K, it sounds like, I mean, they deliberated for 6 hours, did nothing. They took a break. 20 minutes later, break's over, they had a deal. So literally, 2 guys went outside, had a cigarette, and they're like, all right, how about 500K? And they're like, yeah, okay, we got to do something. And they go back in, they're like, okay, everybody, 500K. But it's not enough. It's a wimpy compromise. So they should have did a mill. So it'll go up. I'm not convinced it'll go any higher on Brent than the 66 to 68 level. It's not a big, huge deal. But just in case, let's do a quick lesson here. Okay, this is often helpful to the newbies, so let's do newbies. Okay, this is number of barrels of oil. Let's call it, let's say 100, 200, 300, 400, 500, 600, 700 barrels per day. Okay. This is thousands of barrels B per day. B per day. Barrels per day. Okay. And then this is the price of oil. We'll say 10, 20, 30, 40, 40, 50, 60, 70, and so on, okay? And we will call this oil, okay? Now, the first thing you want to look at is the demand curve. What this shows you is when price is $10 a barrel, demand is high. When it's $60 a barrel, it's low. You see that? Expensive, demand is low. They're only demanding 1.5 to 2. When it's cheap, the market will take 600,000 to 700,000, right, barrels, right? Big difference, right? So that's why the demand curve is down. Hopefully that makes sense to you. Now let's look at the next one, and let's look at the supply curve. And what this is telling us, and never forget, you should always label your charts. There's supply 1. And the equilibrium price right now and the demand is this. Right now, the market and the supply come together here and just shy of 4, right? And a price of 40. Okay? That's where the market is. And now OPEC comes out and says, hey, yo, you know this kid? Actually, they didn't say that, but they cut oil. We'll just, whatever, less oil. Okay? Supply 2. Okay? There's less supply. The supply is less. So, right, we move the curve this way. Numbers of barrels per day are less. So now the market is producing this much, 2.5 instead of 4. But what happened to the price? Okay? Price went up to $50 a barrel. Price went up when OPEC reduced the numbers of barrels per day. Okay? So that's what happened. That's what you would assume in your standard supply and demand equation. Okay? This is a supply shock, if you will, where they're suddenly on demand, okay? An exogenous supply shock shifts production down and jacks up prices. So that's what you would think would happen. But what do you think the ultimate response to this will be by Canada and the United States? OPEC cuts 500,000 barrels. What do you think Canada and the United States will do? And of course, Russia's supposed to cut too, but what if Russia cheats? What do you think the rest of the market, non-OPEC, will do? Produce more oil. Hey, Canada and the United States can produce more oil. And now at $50, it used to be $40. Now they're like, it's the same oil that they had last week sitting in a barrel. They look at the barrel like 3 days ago it was $40 a barrel. Now you look at the barrel, same oil, you're looking at it, it's gone up 25%. From 40 to 50. Holy smokes. Nothing's happened except it got more expensive. Now do you want to sell that oil? You're like, yeah, dude, I'll definitely sell it at 50. So Canada and the United States come in and they make that up. Maybe they do it even better. And we go to supply 3. Okay? And they overproduce, they overshoot. And it goes from 2.5 back to 4 to almost 5. Price drops from 50 to 25. Now, these are dramatic moves, right? But you get the point. I think the United States and Canada could, with a wink, create 500,000 barrels of oil. So it's not enough, is what I've been saying. It's not enough. And I think the shift, because of the exogenous supply shock, will have a temporary effect. Then we'll very quickly, in a week or two or three, find out that it's not enough. The cut is not enough. It just makes Canada and the United States more money, and they fill that void, and we go back to where we were. That's my thought. What do you think? Neat, right? Okay. Nice. The projected high, the conservative projected high for the month of December is $59.40. We're just about there. The aggressive projected high for the month of December is $60.65. So with my analysis that I just explained, which is a form of fundamental analysis, my fundamental analysis tells me that this goes down, up, down, up, down, up, down. That's what I think. And that by the end of December, prices of oil will be lower than they are now. Okay? Cool, right? How do you guys feel? Was that too esoteric? I think I'm running out of steam. I need more coffee. What just... Okay, this is on fire. Get ready. This is the first line in the sand to seriously expect a top. This is a cluster now of weekly and monthly pivots. Doesn't mean it will fall, but boy, oh boy, oh boy, oh boy, oh boy. Let's watch this minute by minute. This ain't going down we planned, cause this was no ordinary man. He stood about 6 or 7 feet. Now that's a creep I'll be seeing in my sleep. Yeah, that's the top, bro. That's the top. Yeah, Sammy, this is recorded. Go to youtube.com/FX Street. Again, guys, you can hang with me every single day for free. Just become a client to tradersway.com. Visit tradersway.com. Open a demo account. You can download MT4. You can pay $5 and get all my chart templates at MetaTraders. So now you have the exact same thing I have. You can check out their execution speed. You can check out the spreads. You can get those amazing swaps I'm collecting on the exotics. You can have everything I use. Cost you nothing. But in the back office, there's a button that will take you to my daily webinars. So I really invite you to join me. I think you got the $5 for the template. And that's just really so that you introduce yourself to me, that I know you're a real person, not a fake email address, you know, hotcherry69@hotmail.com. No, come on. Who are you? Where do you live? Where are you from? What's your story? So paying $5 makes you real. And then you might, once in a while, get a special from me or an announcement. I don't crazy spam you. Euro dollar dropping hard. Yeah, well, I wanted it to, you guys. Remember that? I said, look, I really need this to fall. You're welcome. You're welcome. All right, so WTI, come on now. So this is the first one. I'd call this like a plan A for bears. Plan B is the 60-65, okay? But this is a weekly, this was the weekly R2 monthly M4. So this is a very particular cluster, okay? This is a plan A for bears. So a bear now would be looking for like a reversal pattern or whatever puts them into a trade. So you might want to wait for something like this and sell here, or you wait for a 5A cross or down to the 21, then back up and then retest that and then down, or whatever you look for, right? It's all good. How about a lower, right? Lower low, lower high, lower low, lower high. Just whatever you look for your entries, you're looking for now. You know, if you're a bear and you're considering this a plan A, that this is your line in the sand. Now, it doesn't mean sell. It means prepare to sell. What do you need as your trigger? Because this could still just go boom, and you're way up here. So I didn't say sell it. I said if you were a bear, this is your plan A as far as price. So now you only know the price. 59.75 is a correct price to start looking to sell. Now, what time? How do you time your entries if you're a bear and you're at your price? Well, that's like a 5A cross maybe, 21.55 cross, right? A double top, lower low, a 1, 2, 3. Head and shoulders. I don't what is it that you look for? It's all good. It's all the same. I don't really care. But the thing is, you have to have the patience and discipline to get the trigger. Imagine a trader that doesn't have the patience to wait for a 5A cross on a 1-minute chart. Like, really? You can't do that? Dennis says, how does the US dollar affect? Well, okay, the market prefers certainty, right? So if Trump gets elected, the dollar weakens. Done. However, the market does not like uncertainty. So if like Elizabeth Warren wins, we don't know what's going to happen, but Wall Street is afraid. And so if Elizabeth Warren wins, the dollar gets ridiculously strong as the market collapses. If Biden wins, he will do basically what Obama did, which was nothing. Well, we know how to work through that too. We went through nothing with Obama for 8 years. So, all right, that's not so worrisome. And it'll probably rally, or it'll go down for a while, then it'll return and it'll be fine. It'll be fine. It'll be fine. It'll drop for a month or two, then it'll recover, and we're like, it's not so bad, and whatever. Okay, so it comes down to certainty. Does the world know how to handle a Biden White House? Yeah. Wall Street knows how to deal with it. What to hedge, what not to hedge, what to expect, what not to expect. They might not like it, but they'll know how to deal with it. If Trump wins, they might not like Trump. They might hate Trump, but they're like, well, we know how to deal with Trump. We're used to the tweet thing. We know how to hedge things. Some firms are going to know how to make money and on the volatility, and like another 4 years is going to be like the previous 4 years. So they're like, yeah, okay, we got this. Okay. So if Biden wins, it'll be fine. If Trump wins, it'll be better because there's no change. The certainty is there. If someone else wins, then we're like, we don't know what to expect. We have to create a whole new cabinet. And what about the majority? And who has the majority now? And like, there's so many uncertainties. And that's not good for business. It's not good. It's not good. So that would be a strong dollar, which would then lower inflation even lower. And the Fed would probably have to cut. And then that would increase the dollar more, which would kill exports. So then there'd be some unemployment. All of a sudden, we'd go from full employment to less than full employment. And that would strengthen the dollar more. There'd be talk of either zero interest rates in the United States or maybe even negative interest rates in the United States, like in Japan and Europe. And it's a whole different path. Does that make sense? I don't know, Chebby. You'll have to talk to them. I don't know. I'm an analyst. I don't know nothing about nothing except trading and how to walk a runway. It's the two things I know. I know how to trade and I know how to walk a runway because, I'm an ex-supermodel. So other than that, I don't know nothing. Ice water, think of it this way. It's not, so you say an oversupply of money devalues your money. Absolutely. But what happens to the global supply of US dollars if the US stock market crashes? Or not crashes, but like has a serious retracement. What happens to the global supply of US dollars? Increase or decrease? Almost 14 years here at FX Street, but closer to 20 on my own. The US stock market has a serious decline. What happens to the global supply of money? Increase or decrease the global supply of US dollars? Yeah, esoteric, I don't know, 16 years, I guess, something like that. It's a question, guys. I don't know how long the lag is, but if the U.S. if the U.S. stock market has a serious decline, what happens to the global supply of U.S. dollars? Does it increase or does it decrease? So let's talk. So that freaks the Americans out, right? Their portfolios are tanking. What does one do when they exit their portfolio? They get out. Now, some of their portfolio might be in the local stock market, but also if you're long the stock market, and particularly when prices get really high and you're already in, and you've been in since 2008, 2009 you were buying, 2010 you were buying, 2011 you're buying, 2012 you're buying, 2013 you're buying, 2014. After some point you're like, dude, I'm in everything I need to get in and a bunch of other stuff that I paid too much for. So then you start looking outside your normal portfolio. Alternatives. Well, that might be hedge funds, it might be metals, it might be investing overseas. So you might be investing in China. You might be investing in Europe. Okay? In particular, think about businesses. Okay? So all of a sudden, what you're holding, your main portfolio, is tanking. You're like, get me out of this. And all this other stuff, like overseas stuff, you're like, get me out of that German company, get me out of that French company, get me out of that Italian bank, get me out of Vietnam, get me out of Indonesia, get me out of China. Just get me my cash. Everybody goes to cash, which means that money leaves those foreign markets and returns to the United States, to their bank at JP Morgan or Bank of America, okay, or Goldman Sachs. Therefore, the global supply of those dollars diminishes because the dollars used to be in all those countries. No more. Americans got out. They brought it all the way home. And cash is king. Everybody knows that. So everyone goes back to cash. Supply of dollars internationally diminishes, and the value of the dollar gets ripper, amazing strong. Euro weakens, pound weakens, right? Everything weakens. It all comes home. Now, the Swiss franc will also get strong because a lot of wealthy people have money in Switzerland. So the Swiss franc will get strong as investments from all over the world get cashed out. And that cash then goes and sits in a Swiss bank account. Swiss franc gets strong. Japan hasn't been able to pay depositors a positive interest rate for like 30 years. So if you're in Japan and you plan on retiring one day, you can't save money. If you save money, you actually lose money. So instead, every living soul in Japan invests their money outside of Japan, because the return in Japan is negative. So you have to invest globally or you're guaranteed to lose money in real terms and in nominal terms. So what do you think happens if the global stock market starts falling? Every single human being in Japan cashes out of those global investments, and all that money gets converted back into Japanese yen and put into their zombie banks in Japan. And the Japanese yen gets ridiculously strong. The dollar gets ridiculously strong. The Swiss franc gets ridiculously strong. And now you know why. And hopefully you give it a little thumbs up. Hopefully you give the thumbs up. Would you like? Will you like? Please show some respect to FX Street for hosting us today. Please like. Please leave a comment on the recording, please. Please subscribe to the FX Street YouTube channel. And of course, visit Trader's Way, open an account, and hang out with me on Monday, and then on Tuesday, and then on Wednesday, then on Thursday, and then on Friday of next week, and the week after, and the week after. And somewhere in there, we're going to have to take Christmas holidays. But I rarely take holidays, and even during holidays, I often do webinars anyways. I sat down the other day. It was a holiday. I think it was Thanksgiving, the Friday of Thanksgiving. And I sat down to do some Harvard work. And I'm like, I'm sitting on my desk, so I just did a webinar anyways. People are like, "What are you doing? It's a holiday." I'm like, "Yeah, well, let's do it. Let's do it." Yeah, it's true, Ed, right? When I did Bloomberg television, so I've done Bloomberg 2 or 3 times. And one time, what we did is I just stood outside one of their trading floors. And there was a producer, an assistant, and a cameraman, and me. So we set up shop, and I'm just standing there, and there's the trading floor behind me. And the cameraman's got the camera in my face, like literally like this. And then the producer's just standing there with this list of questions. And one of the questions was, explain the Japanese housewife. What would you say if somebody said that? That could be a really misinterpreted question, right? What do you think of Japanese housewives? I love Japanese housewives. I spend all weekends on my Japanese housewife websites. They're like, no, that's not what we mean. So anyway, so I had to explain that one question. And they're asking she asked really hard questions like, what is a pip? That's where we started. And by the time we were done, I'm standing, I got my $1,000 suit on, my 7-fold tie, I got my beautiful dress shoes, just beautiful, right? Which means I hurt like crap to just stand there on concrete floors so she asked me questions like just one after another for like an hour, till my calves are cramping. I felt like a woman wearing stiletto heels all day. It was crazy. Just one question after another, just for like an hour. What is this? What is this? What is this? What is this? What is? And you're just like, amazing. So yeah, the Japanese housewife, that's the story where the Japanese housewives are the ones that make the investment decisions. Craig says, why wouldn't the euro get strong? Europeans are poor. Greg, Europeans are poor. Have you looked at the import-export data of Europe? Europeans don't buy anything. They don't import anything right now. Europeans are dirt poor. Okay? 6 months ago, I visited the BMW dealership and the Mercedes dealership several times because I was going to buy a car. I did buy a car. And I was talking to the salespeople, and they're like, "Oh my God, we're selling cars like crazy." And I like certified pre-owned stuff because I don't like the depreciation and stuff. And he's like, "Oh man, just come out on Monday." He's like, "After the weekend, we'll have like 40 more cars." I'm like, "Why would you have 40 more cars?" He's like, "We'll sell that many this weekend, like every weekend. People just drive in their 2-year-old Mercedes and they buy a new Mercedes and they just drive it in and we'll have 40 new cars for you to check out on Monday." I'm like, "Really? You guys are rolling over 40 cars at least every weekend? These are $100,000 cars? At least." Like, wow. No kidding. Like, that's what I said to him. And this isn't like a big fancy Mercedes. The one near me sucks, right? And the BMW dealership near me sucks. This sucks, right? So anyway, so like these are like crappy dealerships where you're like, you put your hand on your wallet when you walk in because you feel like you're going to get mugged. And yet they're rolling over 40, 50 cars a weekend, 100 grand each. You're like, holy snap. You go to Europe, no one in the last year in Germany has bought an LG or Samsung TV. They can't afford it. It's amazing when you look at the stats, the import statistics of Europe. Oh my God. Did you see the industrial production data Germany today, down 1.7% again. It's going to get to the point where, like, what did Germany produce this year? Nothing. Like, oh my gosh, Germany's in serious trouble. So, like, are Europeans investing globally? Well, if that was true, Turkey would have euros. Turkey doesn't have euros. Why? Europeans can't afford to invest anywhere. They can't put their money anywhere. They don't have any money. Deutsche Bank is insolvent. Why? Germans don't have money. Right? Like, it's a very serious situation. And the weird thing is there's no end in sight. There's no end in sight. Nobody's doing nothing. So hopefully Christine Lagarde comes in and shakes things up. But, you know, she's a smart, tough cookie. I don't know. I don't know if she's got the political power. And that's part of the problem with the ECB. There's no political power. Right? I mean, ECB should just go to Italy and say, "What? Fix your banking problem." It's not that complicated. But that sector's a disaster, right? It's been 10 or more years and the European banking system is not fixed. Why? The only thing the ECB can do is address inflation. But there is no inflation. So how does it fix a banking system it doesn't regulate, really? It doesn't have a lot of power over that. And what about, like, fiscal policy, you know? Right? Like, are the Germans doing anything to fix their recession? Yeah, right? Just like, wow. So, if there's no money invested abroad, there's no money to bring home. If there's no money to bring home, the euro doesn't get strong. Okay? Now, at some point, Europe will get so cheap, Americans are just going to have to buy it. Now, I said 7 or 8 years ago that I think the solution is China, instead of doing $1 trillion stimulus package for the Chinese, China should come in and buy Europe. Make that the stimulus, right? Because when Europeans get wealthy again and start buying or just start importing, okay? Once they start importing again, a lot of that's going to come from China, and that will keep China factories going, that'll keep jobs going, that'll keep growth going. And so if China wants to save itself, it should save Europe. By the way, I said this 8 or 9 years ago. China should save Europe. Then Europe saves China. China saves Australia. Australia saves New Zealand. And all of this has a positive impact on the United States. The United States has a positive impact on Canada. And all of a sudden, the whole world is functioning again. Okay? So that's that. How do we do holding back this oil rally? Oh, well, the currency is garbage, Leonardo. There's a difference. There's a difference between low growth and garbage. So when a government simply steals money from its people, literally goes into their bank account, repatriates it, it's uninvestable. When the country does not pay its debts, it's not investable. Like, if I gave someone $1 million knowing that there's almost a for sure chance that they're not going to pay me back, then I'm not going to have a lot of appetite to pay them back. And then they're like, no, I'll pay you 10%. I'm like, 10%? You're going to steal from me. I know it. No, well, how about 20%? You're still not going to pay me back. Why? Like, at any rate, how about 50%? I'll pay you 50%, lend me money. I'm like, dude, you are not going to pay me back. I don't care how much you say you're going to give me an interest. I think I'm going to give you $1 million and I'll never see you again. That's the problem. So I hope you're not Argentine. I love Argentina. I have Argentine friends. I've always wanted to go to Buenos Aires. I love Argentine wine. Malbec all day. I want to go to polo fields in Argentina. I want to ski in July in Argentina. I love me in Argentina. But I don't know if I want to give it money. Right? Like, yeah, but Leonardo, that tells you something. Nobody trusts the Argentine government. Nobody. Nobody. Now, I might buy real estate or something, right? I think I would. So there's two things I might consider. I might consider buying an apartment building, beachfront property in Venezuela. I actually talked to somebody with $300 million about it like 2 nights ago. I'm like, how about Venezuela? Blood's in the streets. What do you think? I said the government's going to collapse. Oil men are going to come in. They're all going to want to live in luxury apartments in beautiful tropical Venezuela with views of the sea. I want to go in and buy a whole bunch of apartment buildings. Okay? The second thing I'd be very interested in is buying like horse property in Argentina. Hopefully not too far from Buenos Aires and stuff. I don't know if I can get a nice like horse farm with maybe a riding arena and maybe a polo field. And I'd love to have views of either vineyards or mountains. I don't know if that's possible, but that's what I'm thinking. That'd be cool. Because I think it's more difficult for the government to repatriate the land. It's easy for them to just take money out of the bank accounts. It's much harder, but worse things have happened, and people have been in, legal battles with Argentina or Puerto Rico for like years and years and years. But hey, I'd rather do that, I think. But I love the stat of how Argentina was more wealthy than Canada. It was the 5th wealthiest country before World War I think it was. It might have been World War II. But then socialism came in and ruined all of Latin America. But you can blame socialists, but before that, the Americans went in and raped and pillaged everyone, and before that, the Spanish went in and raped and pillaged everyone. So if the Europeans are going to rape and pillage and the Americans are going to rape and pillage, you can't really blame the socialist big dogs from Soviet Union going in there and ruining everything. Why not? It was easy, right? So now, hopefully, it'd be great if Latin America got its act together, but I understand it's going to take a few generations. Yeah. Well, good luck with that, Leonardo. But I have a good Argentine friend. He was hanging with. We went to when I was in college. I took over a giant house, and I filled it full of foreign students, and it was great. So I got to live for free. Well, actually, I paid rent, but it was very cheap. And one of the founding fathers of this house, one of the first people to live there, he was from Argentina. And to give you an idea how long ago this was, there was a little startup called Yahoo. And at the time, there were stories of how they raised money. And because it just happened, it was a little startup. And at the time, it was just a list, like no joke. It was just a website. It may not have even been HTML yet, but it was a website and it just had lists of like other websites you can go to. It was just links. Like, you want to talk about sports on a discussion board? Click this link, like, right? If you want pornography, click that link, right? Like, it was just a list of websites because there was no websites. Like, once you got a computer with a browser and you got a modem, which was really great, connecting a modem and like, well, now what do I do? I'm on the internet. What do I do? I don't know. Where do you go? What do you use the internet for? I don't know. Go to Yahoo and find something to click on. So you literally go to Yahoo. But at the time, Jerry Yang was sleeping under his desk in this trailer outside of Stanford University. And I think it was Sequoia. The boys from Sequoia go over. They walk in and they're like, dude, the place is on fire. And he's like, no, that's just the server. It's smoking. It's so hot, I can't keep it cool enough. They're like, why is it smoking? Oh, because there's like 200,000 people from around the world on my server right now. And they're like, how much money do you need to get a server, or to get more servers, to get like, wow, what do you need, right? And so they started Yahoo. So around that time, my friend from Argentina, who was literally living on a mattress on the floor of this giant Victorian house, he's like, my country needs this. I'm like, what do you need? I'm going to do this for Argentina, the most beautiful country in the world. We need a Yahoo, but in Spanish. Cool. I mean, when he spoke, he practically was singing and dance, right? My country needs this. So I shit you not, he did it. So there he was. He was like, I don't know, 20, 22. And he had millions of US dollars because he sold the company. There you go. How would you like to be 22 in Argentina in the 1990s with a couple of million US dollars? Great way to make friends is all I'm saying. Great way to make friends. So good for him, huh? The funny thing is, what was that, 20, 25 years ago, 30 years ago? I spoke to him maybe 3 months ago. Still in contact. Cool. So I hope the best for my brothers and sisters in Argentina, but self-inflicted wound, unfortunately. Now, like, there are great stories out there though where you can fix things quickly, but like Estonia, I think it was, has a fantastic story of when the Soviet Union collapsed and they got their independence, and the people in charge, like the 50, 60-year-old men with white hair, they looked around at each other like, we got a free country, but like, they looked at each other like, we've been Soviets like for our whole life. They're like, we're not capitalist. We know this country needs to be capitalist. We don't know anything about capitalism. So they took a bunch of kids in their 20s. Think of the courageousness. A bunch of kids in their 20s that were Estonian, but had gone to places like Yale and Harvard and stuff, and seen what capitalism was, got capitalist pig dog education. And then they told these kids, look, you're going to build a stock market. You're going to do this. You're going to do that. And they let kids redesign the entire economy and governmental structure to be more capitalist and to take care of their own people. Like, think of the bravery. Like, how many bosses at companies hire people smarter than them? None. They always B people hire C people, right? So like the tenacity for these people in charge to say, I'm going to hire a bunch of kids to redesign this country. I have to turn that light off because my screens went out. Amazing, right? And what else? How about Ireland? Remember pigs? Ireland and Italy and Greece and Spain, they're all like at the brinks of collapse. Ireland turned themselves around fast. They had a fantastic finance minister that just said, fix it. And they fixed it. They got out of their financial problems in like a couple of years, but they were really seriously in trouble too. And yet there are some other countries that 10 years later are still in trouble. But so when I think of like Argentina, it has so much going for it. Educated people, natural resources, a fantastic history of success. It just has to wipe out the last 50, 60 years and just rebuild it. And it's possible. There are examples of coming back from of a bad scenario. And capitalism always wins. Capitalism always wins. Sure, Femobix, but like Slovenia, maybe not as much. Bulgaria, not as much. Slovakia, not as much. But like Czech Republic, Hungary, yeah, for sure, right? If you're looking at Lithuania, Estonia, and Latvia, yeah, they did a great job too, right? Yeah, for sure. But what I'm saying is, there's never been an example of a socialist country ever working. It's never worked in the history of humanity. And we've tried. It's such a great sell. Everybody's, right, nobody has to work and everybody's equally rich. It doesn't work that way. Everyone's equally poor until nobody has nothing, okay? It's been proven 1,000 times over and has never worked once. But capitalism works. Now, democracy, I'm not so sure democracy works, but I know capitalism works. And so if all of Latin America or all of Africa or, any other economy that is stagnant, like we'll say like Argentina or Venezuela, these economies can be turned around if they embrace capitalism. So an overbearing government or a dictator, no good. Okay? No good. No good for capitalism. But there are consequences to capitalism like income disparity and stuff, which maybe a government can come in and try to moderate, but you can't stop it. It's a part of the model. And if you screw up the model, then again, there's no upside and there's only unintended consequences that are negative, right? So what we need to do is fix capitalism, and we've always known it's flawed. Well, not flawed. There's undesirable natural consequences, but it's like, what happens to someone that says, we need to prevent forest fires? We need to do whatever it takes to prevent a forest fire. What inevitably happens? The biggest, worst forest fire ever seen, and it destroys just massive destruction. Well, if there were lots of little fires, it wouldn't have been that big of a deal, right? Like it's natural for a forest to have forest fires. It's natural for capitalism to have boom and busts. And what happens is dumb money in a good market, when everyone's making money, dumb money gets thrown at dumb ideas, and because the overall market's so good, it still makes pretty good money, and then more dumb money gets thrown at more dumb, and businesses get lazy and complacent and make bad investments because they have the money and they can take the loss, and bad things happen, and those people must be removed from the market. Those companies need to be removed from the market. It's culling the herd. The sick and the weak of the herd die, so the herd is stronger. The forest fires make this forest and nature stronger. The declines in capitalism makes capitalism stronger. So if you prevent the downturns, if you prevent the job layoffs, like a politician says, well, I can't get reelected if everyone's losing their job, so I'll make sure no one loses their job. And if the companies run into the ground from stupidity and gambling and illegal activities, don't bail it out. Let it die. Because the next company will not suffer through this moral hazard, and they'll just like, dude, we can't make risky investments because we'll go out of business like that other stupid company, right? So like, capitalism's the right way. Overbearing government's not good, and so the U.S. is a little bit overbearing, but like socialist governments are way overbearing, and that was never worked. So, anyways, there's my lecture for the day. All right, so we talked about international political economics. We talked about economics. We talked about macroeconomics, microeconomics. We talked about fundamental analysis, letting winners run, keeping your losses small, planning ahead. We talked about seasonality. We talked about general fundamentals. And I tried to answer as many questions that you possibly had. And we covered a whole bunch of technical analysis. And this WTI skyrocketed, and we stopped it on a 1-minute chart from rising. Anything else? If you want my chart templates, visit metatraders.com. If you want to join me on my daily webinars, which are an hour and a half a day and totally free, open an account at tradersway.com. And make sure you show some loyalty and respect to FX Street for being our host for the 164th month of this webinar. Show your loyalty and respect by subscribing, by liking, by leaving a comment, and this is important, thank our moderator for being such a great moderator today. Thank you, moderator. Thank you for the last 3 hours of your life. And thank you, guys. Hopefully I'll see you Monday, tradersway.com. So peace on earth. Let me do this big. I like doing this big. Hang on. Oh, I got my drawing tool going. Let's do this one big. This is important. Peace, love, profit from international trading. I'll see you guys. Cheers.